Hey guys, hey, how is everyone? How is everyone? I pull up the questions, pull up the chat. Hey Imad, nice to see you. Damn, I know I need to activate those stuff for you. I'll activate it. I'll activate it soon. I'm so sorry. It's so slow on that. Right. Hey Mark, first as always, nice to see you. Edwin, nice to see you. Diana, nice to see you. Alan, Robin, nice to see you guys, man. Yeah, nice to see you guys finally back. Hey Jasper, nice to see you, man. We got Simon Marugesh. Thank you for your congratulations. Right, nice to see you guys tuning in. Yeah, I'm a dad now. Right, I can practice all my dad jokes. Right, I one of my favorite jokes. See if you guys got it. Do you know what Yoda? You know Star Wars. Do you know what Yoda said when he saw himself on TV? Anyone can make a guess? I don't see any guesses yet. How do you know? No one knows the answer. He said HDMI, because like MIHD, but Yoda likes to flip it the other way around, so it becomes HDMI, right? I mean, that's such a lame dad joke. I'm practicing it. Yeah, I'm practicing it. Right, I can't wait to tell my son all these dad jokes when he grows up. Yeah, our baby is fine, Diana. Thanks for asking. Yeah, Eric, right? Baby's fine. Drinking a lot. I think he is in his third week, 3.5 weeks now, right? So they say that there are different leaps for babies, right? There's a time when they're starting to get a little bit more consciousness, right? They maybe start to recognize you a little bit more clingy here and there, right? But yeah, it's they should be getting fun, right? Getting fun. He's drinking so much milk. I don't know if it's normal, right? The recommended intake for a baby is about a 400 to 500 at least for his weight, but he's drinking close to double that amount. So I'm not sure if it's normal, right? Yeah, Jamila is doing fine. Thank you for asking, right? Graham, welcome back too, man. Right, Kanemba, I'm doing good. Thank you for asking. Right, and nice to have you back too, Graham. Right, just in time for today's session, right, on advanced correlation, right? Hey Mark, nice to see you. Mark Innis, right? Nice to see you tune back in. For Mark Mangyon, right? Haven't started him on whiskey yet, right? Haven't started him on whiskey. Sometimes when he's up all night, right? I'm just wondering whether a tiny drop of whiskey into his milk, would help him sleep better, right? Who knows, right? Yeah, who knows, right? Hey Samuel, nice to see you. Nice to see you. Tune in. Thanks for tuning back in, man. Right. Joanna, nice to see you. Joanna Francois, right? I finally know how to pronounce your name. Right. Let me just pull up the attendee list. Right. I can see Desiree, of course, right? She's yeah, just in time, right? She always just tunes in just in time, right? Awesome stuff. Thanks for tuning in, everyone. It'll be a fun session today, right? Really going a little bit into advanced correlation. I can see my dear friend Annabelle here today, right? Nice to see you tune in too. Yes, Joanna. My little boy is named Lucas, right? Yeah, his name Lucas after George Lucas, right? But yeah, it's his little Lucas, right? Jay, nice to see you tune in too. Marek, nice to see you tune in, right? Okay, so yeah, today's session is on correlation, advanced correlation. So I'm going to show you a couple of handy ways you can use it, not only intra and um, cross asset correlation, right? So it's not only within an asset class, like you can do correlation within FX, Aussie yen, Euro yen, pound yen, Euro dollar, dollar franc, but can you also use it cross asset correlation like gold and Australian dollar, right? Dollar CAD and oil, right? That's where you can even throw in the indices, right? How is the S&P, how is it correlated with maybe the DXY, right? And that is where, when you're putting in all these different kind of correlations, right, you start to see a bigger picture, right? There are people out there who say, hey, I want to be a euro dollar trader. I want to be a master euro dollar trader, right? And the problem with that is if the problem with trying to achieve something like that is trying to stare at one corner of the jigsaw puzzle and trying to, not looking at all the other pieces and just try to, build this tiny little corner of the jigsaw puzzle and be able to tell what the big picture is, right? You usually need to build the whole big picture, then you see where everything is placed, then you get an idea of what, how all the pieces are placed, right? But if you want to just focus on one, instrument like euro dollar and just looking at the corner, you're never ever going to get a big picture, right? And never ever be able to really trade better, right? So the trick is that because the markets are all interconnected, they're all intertwined, they all move each other in different correlations, right? So if you know how to use this, you can actually use it very, very effectively in filtering out what I call fake outs, right? So sometimes the market just fakes you out. You think that it's going to be a breakout. Everything says that it might have been a breakout, but then it was a false breakout, right? So how do you avoid this kind of false breakout? False breakouts, right? You can actually find the answers, a lot of it in correlation. Okay. Now right, it's a fact. I shouldn't have a dash on the top of yeah, Desiree, I'm honored that you would dash from your car to your notebook and to your house just to catch the webinars, right? Yeah, it's good stuff, right? But at least you are not watching the webinars in the car, right? And I'll be worried if you're watching it while driving, unless maybe you have a Tesla one day, right? Then you can just let it self-drive and you don't need to be rushing all over the place. Bob, nice to see you tune in. Right, got Bernal, right? First timer here. Welcome. Right, Marek, nice to see you. Okay, so just could we get a show of hands, right? Could I just get a show of hands? Just give me a second. Who is here for the first time, right? Who is here for the first time? Right. Okay, we got Edwin Mayenga here for first time. We got Ronelli, Marek. We got Abdirahman, right? Oh, quite a number of you guys are here for the first time. That's great, right? I'm here for the first time. I'm going to show you guys how you can get access to the VIP room. We can hang out with the rest of us traders, right? It's pretty active. It's pretty fun, right? Share a lot of trading ideas there. A lot of you guys have become better traders just from learning from each other, learning from us, learning from the rest of the analysts and traders around here. I'll show you guys how to get access to the VIP room later. Okay, but yeah, now without further ado, let's begin today's session. All right, let's begin today's session. Now, disclaimer as usual, remember guys that any information in this webinar is purely educational in nature, so nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade, because trading CFDs is dangerous. So yeah, stay safe, right? Stay safe. Yeah, Ronelia, I'll show you how to get that in a minute. Right, Mario, right? I can see that you're speaking in French. Could it be French? I can't tell if it's French, right? But I do not speak that language, right? Yeah, so it's a right. Simple comment video. Okay, I'll show you how to get access to YouTube in a bit, right? Right. If you can translate that to English, I can say, "Hey, Joel, nice to see you." Right. All right. So this is the agenda for today, guys. This is the agenda for today, right? I'm gonna touch really quickly on what is correlation. Okay. What is correlation? Where's my handy dandy pen? Right. What is correlation? We're gonna look at FX correlation, cross-asset correlation, and putting into a trading strategy. That's a lot of fun part where I'm gonna show you how you can. It's not an easy style of trading, but it's very effective in helping you confirm breakouts. It's a very effective way of helping you avoid false breakouts, which are the major contributors to people, losing money, right? So I'll be showing you how to do that in a minute, all right? Okay, now let's begin. For those of you guys who are here for the first time, just introducing your host for today. Okay, my name is Desmond Leong, external analyst here at IC Markets. Here I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? So a finalist for 2019, 2020, and 2021 Best FX Research and Best Equity Research. Regularly advise major financial institutions on where the markets are heading. But we have a special partnership with IC Markets, where we're bringing guys the good stuff, the juicy stuff, right? The stuff that are taking trading to the next level. We have a lot of testimonials pouring in for people who really been following us for 12, 13, 14 months, right? Seeing their trading go from unprofitable to profitable, 40 to 60% hit rate, 60 to 80% hit rate, right? And it's just really nice to see you guys. Some of you guys who finally pass your funded trader test, right? Yeah, it's not an easy journey, but if you do it well, you learn the right things, right? If anything, you don't need to spend 30 years in this business to be a profitable trader. You just need to spend 30 days learning the right stuff, right? Because like I always share in trading, right, is very different from academia, right? A lot of people think that trading is similar to academia, right? Meaning that you can, the more you study, the better you're gonna do. But that is as far from the truth as it is, right? Because trading is very different. You can learn the wrong stuff, right? You can, and people who are usually very smart tend to struggle a little bit when it comes to trading because, they're thinking all I need to do is study, right? So like when I used to study, right, the more I studied, the better I perform, right? And there's a positive correlation that the more you study, the more you understand, the better you perform. But the danger of trading is that the more you study, if you study the wrong stuff, you end up losing money, right? You can run full speed in literally the wrong direction, right? So that's something which I want to warn you guys about. That it's not only about studying, it's about having the discretion to know what not to study, right? Different kinds of technical analysis, different types of approaches, right? Work with different types of trading strategies. For example, if you try to use fundamental analysis, right? Fundamental analysis, if you go really deep in, you take a master class on fundamental analysis, you understand how the economy works and everything. Okay, not only econometrics, but you dive really deep into fundamental analysis. That might not help your trading if you're a scalper, right? So you can see that depending on your trading style, your trading strategy, your trading approach, right? It might be better if you don't study some stuff, right? Because maybe fundamental analysis, right? You have a long-term view. Maybe you are bullish on electronic vehicles, EVs, right, over the next 10 years, right? So maybe you have a natural bias against oil, right? And you believe that oil is going to drop, right? Because of the natural bearish bias, right? You say that, all right, I think oil is going to drop over the next 10 years. How is that going to help you in the next one day when you're trading oil, right? Oil is not going to drop just because it's going to trade. It's not going to drop in a straight line all the way down, unless it's like Luna, right? I hope no one got into Luna, or no one he didn't get too much into Luna, right? But yeah, it's that aside, it's not always the case, right? Oil go down and go up, go down and go up, right? So even though you got the fundamentals right from a long-term perspective, 10 years later, you fast forward 10 years later, you realize that you're correct. Oil really did drop, but that overarching bias, right, would not benefit your day-to-day trading, your scalping, right? I'm just gonna read some of the questions that come through, so I don't have too much of backlog. All right, Lawson, nice to see you tune in. Imad, yes, it is us. Don't tell anyone, all right? You'll be surprised at the number of brokers we are actually behind, right? Okay. We got a guy called Jonate, right, which is pretty similar to Junite, right? 2 years on the regular and in results. I'm saying you if no, right? No problem. I don't take. Okay, I hope you learn a lot over here, Jonate, right? Learn the right stuff and you'll be able to trade well. Okay. All right. Okay. Alison says that interested to hear what I think are wrong directions in learning. So I like to go against the grain on a lot of different trading approaches, right? So for example, people who have fixed stop losses and fixed take profits, I'm against that kind of learning, right? You go on Baby Pips, you go on Forex Factory, right? There are those trading strategies there that says that there's a moving average crossover, put your stop loss, put your take profit 100 pips, put your stop loss 100 pips, right? That's a wrong trading approach because the markets do not care if you put if you put it at 100 pips, you put it at 90 pips, put it at 110 pips, the markets do not care, right? They say that, oh, a moving average crossover happened, hence I need to rise up 100 pips. It is wrong to do that because firstly, depending on the instrument you're trading, 100 pips on pound yen is very different from 100 pips on euro dollar, right? So there's no saying that it's going to be the same movement. Secondly, what if, you know, at 100 pips is slightly beyond a key resistance level, so it might not even be able to hit the take profit. It might make sense to fine tune it to become 90 pips, for example, right? So this is an example of what are wrong learning styles. And then the other stuff is not just wrong teachings, but more of learning the right stuff but applying it wrongly, right? So for example, people love the Elliott wave, right? People love Elliott wave, but it might have Elliott wave, right? And why I can say this with confidence is because I was previously, before all this, right, I was at a firm where we are advising the largest trading desk, Brevin Howard, you know, Goldman Sachs, Nomura, right? We are advising them on technical approaches to trading, basically technical analysis using Elliott wave theory, right? And a lot of the misconception with Elliott wave is that people think that it's a very advanced thing. They use it, they should be able to trade better with it. But the problem with that is that, of course, Elliott wave, freaking tongue tied. Elliott wave, right, requires you to have a good understanding, firstly, of Fibonacci, secondly, of correlation, right? If something is a wave 5 impulsive wave, right, on euro dollar, something negatively correlated pair like dollar franc should also be at least a wave 5, right? So you need to, Elliott wave is like the it's very hard for you to map an Elliott wave just on a single currency. You need to look at all the different assets, right? Cross assets, right? Intra assets, right? To really be able to map it correctly. So you can learn it right, but you can apply it wrongly, right? And in fact, you might do better not applying it at all, depending on trading style. Usually, Elliott wave is a little bit better if you are taking longer, slightly longer term positions, right? Because it puts you on the right side of, maybe if you think about it, if you roughly know that 1, 2, you know, we are in an impulsive wave, right? I'm a hedge fund, right? Or maybe I'm a asset management firm. I know that, you know, I can't just get in and out of trades as easily as, you know, retail traders buying and selling. Each time I get in, it's huge amounts of capital. I just want to be on the right side of a certain maybe of gold, or I want to be on the right side of oil. I want to be on the right side of a major index like S&P, right? And all I need is really Elliott wave. I don't care about entering at the exact level like scalping and just playing a trade. What matters more to me is maybe a long-term trade on Elliott wave, catching the big impulsive. I know that for the next about 3 to 6 months, we're in an impulsive wave. I'm going to see profits. That's enough. That's a different approach to trading, right, than trying to apply Elliott wave on the 1-minute chart, which will drive you crazy. Okay. Now can I get a next level trader, Fabio? Yeah, you next level trader certificate, you can. Maybe you will do it with IC Markets one day. We set up an academy for you guys to go through. Edwin is asking a pretty good question. I know it's a slightly off topic, but is there a problem to over leverage? Now I'm going to ask you guys an important question. What is the ideal leverage you should use in trading? Right? What is the ideal leverage you should use in trading? Right, Ronelli, IC does not offer private mentorship, but you can actually tune into the VIP room, which I'll be showing you in a bit how to get access to, right, to learn from us. Anyone want to take a guess what's the ideal leverage? All right, we got Marugesh, Annabelle saying 1:20, right? Marugesh saying 1:30. Leverage is crippling me. 1:1 by that end, right? EMAT 1:100. I do not use an Elliott wave indicator because there is no proper Elliott wave indicator here, right? Fabio says 1:10, 100,000, right? 500 by 1:5. So the answer to this is that there is no perfect leverage. Okay, there's no perfect. I know for a guy like me, you might think that I want to answer 1:5, 1:50, but that's not true, right? Sometimes I find myself wishing that I have 1:500 leverage, because it depends again on your trading style. Some people think that just because you have a 1:500 leverage, you are a risky trader, but that's not true, right? For example, right, I'm a scalper, right? When I take a trade, my stop loss, right? My stop loss is maybe 10 pips. Okay, my stop loss is 10 pips. If I want to risk 3%, okay, let me see if I got a pen over here. right? So if I enter a trade here, right, I expect prices to bounce up from here, right? I have a tight stop loss over here. I want to risk 3% on this trade, okay? So if I have a stop loss of, let's just say 10 pips, my lot size might be, maybe my lot size might be 10, okay? If I had a stop loss distance of, if I have a stop loss distance of maybe 30 pips, right? I'm risking the same amount. My stop loss, my lot size maybe, you know, is 3.3, correct? Now, when I find myself when I have lower leverage, many times, right? If I'm trying to take I try and put a lot size of 10, right? I do not, you know, I'm not able to put that trade because, you know, it requires too much margin if your leverage is like 1:1 or something, 1:10, right? And that is example where I need a higher leverage to be able to accommodate my trading style, right? That does not mean I'm a risky trader because I'm still exercising very proper risk management, whether it's risking just 3% on this trade or maybe another 3% on this trade. I have a very methodical, safe approach to it. Just that because of my tight stop loss distance, to risk 3% in a tight stop loss distance, I need a huge lot size, right? But then from a leverage perspective, right, we're looking at that and we say, whoa, no, huge lot size, dangerous, you know, you can blow your account up. But I'm saying on my side, I'm like, yeah, it's a huge lot size, but my stop loss distance is only 10 pips, right? So if you have proper risk management, actually higher leverage is not a bad thing, right? I mean, if you leverage is like a double-edged sword. You know, you can use it well, you can don't use it well, right? You can use it well, it can really help you you can tame it. It can really help you increase your earning potential. But you don't tame it properly, you see yourself going in crazy into a trade, you get margin caught, you're out, right? So it's that there's no wrong way, there's no right or wrong leverage, right? I can trade as profitably on 1:50 as I can do a 1:500, but it's how you tame the leverage, right? And whether you actually need it for your trading strategy. If you're a swing trader, you take a trade, you know your stop loss distance is very far, right? And you hold it for a long period of time. You don't hold more than one trade. You don't enter more than one trade each time, right? Do you need that much leverage? No, you don't, right? Higher leverage is usually required for people who need larger lot sizes, and the only way to justify larger lot sizes is usually if you have a tighter stop loss. Because you have a large lot size with a large stop loss, you could just wipe yourself totally out, right? So usually, you need to think about it. If you have a higher leverage, yes, you can trade larger lot sizes, but with that larger lot sizes, if you don't exercise proper risk management with tighter stop losses, you can really blow your account. Okay, so putting that into perspective when it comes to leverage and trading, right? That's true, Mark. That's it in the best way. I said, can I get the raw data from the calculated correlation? Yes, Jonathan, I'll be showing you how to calculate correlations in a bit. All right. Why hedge funds say the best traders who lose money? I don't understand. Right. So we got a person called Dadbot asking why most hedge funds managers and portfolio managers say even the best traders will lose money with 1:500 leverage. So it's not that they will lose money, but in the hands of the wrong people who do not know how to tame this kind of leverage, most people will lose money. Okay. How can you manage that? Because okay, wait. Hey, Hamid, nice to see you. Tune in. How can you manage that? Because US say probably really get good pips. Steffi, yeah. So it depends on your. It depends. So this, like I said, 10 pips on euro dollar is different from 10 pips on pound yen, which is different from 10 pips on pound Aussie, which is different from 10 pips on S&P, right? So this is just an example. I'm not referring to the 10 pips. I don't use this for indices, obviously. All right. But anyway, I don't want to. I just want to touch on correlation, right? I don't want to digress too far, right? Just go and touch on a few things really quickly. Follow me Instagram, nothing much. Comfy Desmond, me, my kid, and now my cat. Me, my kid, my cat. All right, you can find me there, right? The Forex Army. You can find some of our trading tools and indicators there. Okay. Now, for those of you guys who want to get access to the VIP room, right? I'm going to show you to go to ic.genesif.com. Right, all you need, right, is a IC Markets live account here, right? If an existing live account is great. If you don't have an existing live account, just go to icmarkets.com and register their website. You don't get anything special by registering through any special link, right? You can just go and register on IC Markets directly. Okay, when you come in there, I'm just going to show you a process on how to register. Click register now, right? I'm going to pick a name, right? What name should I use? I'm going to pick Dean Winchester. Okay. Dean Winchester. Okay. Just going to create a random account here, right? So what happens when you register, right? Oh, you only see a slideshow. Shoots a let me see sharing. Did I share the wrong stuff? guys, I was sharing the wrong screen throughout. I can't believe you didn't tell me I was sharing the wrong screen. All right, cool. Now can you guys see it? Okay, cool. Right, cool. Yeah, it's freaking hell, man, guys. Next time you should tell me. All right, next time you should tell me. Right, I was loading the wrong screen. But I mean, we didn't really. You could still see the slides, which was the most important part. All right. So yeah. Anyway, when you come here, right, you should be able to see. You need to agree to the disclaimers here. Then you can join the server. Okay. Once you agree to the disclaimers, you'll be taken to this place where you need to click request access. Okay. Once you click on request access, right, and this is the part where I ask you to attach proof of your IC Markets account. You can register for IC Markets account over here if you don't have it, but you need a minimum of $1,000 to get access. Click request. Please let me in. Right, you upload file. Basically, you upload any file that you have. Right, I'm gonna upload a file of my baby Lucas. Right, as you can see over there, and you send in the request. Okay. Now, and then we will approve it, and you get access. You get access to it. Okay. How it looks like. I'm just going to give you guys a glimpse of how it looks like in the ICG VIP room. I just going to give you guys a quick glimpse of it. Okay, yeah, so I mean, in here, what I would be able to see is that, there's a request that comes through. I'll be able to, where is it? Yeah, I see a request that came through, right? And if I approve it, right, I can see, please let me in, right? This is the picture of baby Lucas, right? So cute, right? So cute, yeah. And okay, yeah, this person looks like a legit person, right? And I can accept or reject the person. Okay. Now, once you're accepted, right, I'm just going to show you really quickly how you can make the most out of this VIP room. Simply go to any part over here, right? Let's just say we're looking at dollar index, and this is the main feature which you would be using. Okay. If you're thinking that there's a breakout on dollar index over here, right? Looks like a mega. Could be a double. You might think it's a cup and handle. No, it's not a cup and handle, it's a reverse cup and handle. But let's just say you're looking at this, and you can just as easily say, and Desmond, right? Could this be a double top reversal? What double top reversal are you referring to? You can just draw the lines here maybe, right? And you can highlight double top reversal, click this link object to text, select the objects that you just drew, right? You can see them appear over here, confirm, and you send the message through. So how it looks like, I can look at this, right? And I say, hey, someone's asking this question. Could this be a double top reversal? When I hover my mouse over it, you can see it lights up. And of course, you can see the crosshair on the chart. It shows the exact point where you made the comment. So I know roughly when you ask this question, get a better context. I know you're trying to play the breakout, right, over here. Then we can have a nice little dedicated discussion over here. So this is one of the key things you can do in the VIP room, right? Yeah, if you don't have a live account yet, go register for IC Markets live account. All you need is a IC Markets live account to get access to this VIP room, guys. All right, but yeah, all the different asset classes, all the different kind of instruments you can trade by the side, right? Go have fun. Go have fun there. We got nice little ranks. Where is it? Yeah, we got nice little ranks for everyone, right? You can see Simon over here, right? You can see Jasper, Joel, right? Nice to see a whole bunch of you guys in there. Oh yeah, welcome back, Darren. Not sure if you're here. Let's begin today's session. All right. Correlation. Correlation. Let's begin. Okay. Now, where am I? Not this one. The first thing that I want to touch on, right? What is correlation? Correlation is basically when the markets are moving in tandem or not in tandem. There's positive correlation and there's negative correlation. Okay, that these two kinds of correlations that you want to focus on. Okay, so positive correlation means that if one is going up, the other is going up. Negative correlation means that if one is going up, right, the other is going down. These are two things. Negative correlation is not a bad thing. Positive correlation is not a good thing, right? They're just, it doesn't mean that there's negative here means that it's bad, right? They are both equally useful when it comes to trading, right? It's just the way that the instrument might be designed. Because, like, for example, euro dollar, and dollar franc. Euro dollar and dollar franc, right? They are, who can guess if it's positively or negatively correlated? Negatively correlated, right? Okay, that's correct. It's negatively correlated. Okay, so if it's negatively correlated, right? Yes, this one goes up, the other goes down. Okay, but you could just arrange it the other way around, right? Euro dollar and franc CHF / USD. This become positively correlated. So one goes up, the other goes up. Right, so now it becomes becomes positively correlated. So there's no hard and fast saying that, oh, positively correlated and negatively correlated, which one is good, which one is bad, right? It's just the value that you're looking at. What you're looking at, rather, what is more important is the value of the correlation. A value of 1 or -1 means perfect correlation. They go up in tandem exactly, right? It goes anywhere from 0 to 1 or 0 to -1. Okay, what you're usually looking out for, strong correlations are at least above 0.8 or below -0.8. Right, Bitcoin has some good correlation, hard to say, right? But yeah, it's a little bit hard to say. We can try to look at some correlations later for Bitcoin. Okay, now let's continue. Let's continue today's session. All right, let's continue today's session. Right, so that is basically what correlation you're looking at. You can just as easily out there go for some correlation table. My FX book has a pretty good correlation table, which I'm going to share in the chat room for you guys. Right, so what I like about the MyFX book correlation table is that you can actually choose your time frame. Right, this is over the last how long, right? So if your time frame is like 1 month, so it actually measures the price movement of charts across the last 1 month. Right, so you can see that what you ideally want to look out for, you can filter, right? I want to look out for correlation higher than 80% and lower than -80%, right? So this automatically throws out some of the key correlations for you to look at, right? And let's just see how accurate are these things, right? So Aussie yen, are we here? Okay, I'm just gonna come here. Oh man, -80, right? 80. All right, so Aussie yen over here, right? It has positive correlation over the last 1 month with pound yen, 93.2%. Okay, how does that look like on the charts? So this is where you pull up something like TradingView, right? Pull out something like TradingView, right? And this is where, like I say, we got Aussie yen over here. We got Aussie yen over here, right? And let's compare the movement of Aussie yen over the last 1 month. How long ago is what this? We are in May, so let's go to 24 April. Okay, maybe you go into the 1 hour chart. Like, yeah, this the Aussie yen. Okay, according to MyFX book, right, it says that pound yen should have a 93.2% positive correlation with Aussie yen over the last 1 month. Okay, so we come here and then we click compare and put GBP JPY, right? So remember, you're clicking on the plus button over here and you want to put it on new price scale. Okay, new price scale, and there we go, right? In this case, of course, we are going to is there a way I can just change this one? Yeah, line chart, right? So you look at the line chart here and you notice that the price does, when one goes up, one goes down, one goes up, one goes down, right? This part going up, this part it diverges a bit, right? But generally when this is going down, this is going down. When this is going up, it's going up, down, up, down. So yes, true enough, for the last 1 month, right? For the last 1 month, Aussie yen and pound yen has been moving more almost in lockstep tandem with each other. Okay, how this can be used, I'll be showing you in a bit. Okay, but so this is an example, right? And another example, right, is let's just say euro yen. Euro yen has a, okay, which I show you a positive correlation. Let's go with a negative correlation. Aussie CAD. Aussie CAD has a negative correlation with dollar CAD of negative 92.3. How this looks like, right? I'm going to put up Aussie CAD over here. I'm going to remove my comparison and I'm going to use dollar CAD as the other comparison instead. You want to click new price scale. Okay, you don't use same percentage scale. It makes it a little bit messy, right? So we want to use this thing called new price scale, right? And erase everything. There we go. Let's look at the past 1 month, right? So the past 1 month will be 24th of April, about over here, right? We can see that it really does. One goes up. You can see that they are almost like opposite directions with each other. One goes down, up, one goes up, one goes down. So it's a pretty nice negative correlation. Actually, when you zoom out a bit, this correlation goes way further back, right? It goes way further back, right? But it's nice to know that there's this negative correlation between Aussie CAD and dollar CAD, right? So how are we going to use this to trade? Okay, so one thing I'm going to teach you first. Okay, so let's go with positive correlation. Usually is slightly easier to get an understanding on, right? So let's go with Aussie yen and pound yen. Okay, Aussie yen, do a comparison of pound yen. Aussie yen and pound yen. Yes, in this indexes have correlations as well, Marugesh, right? So we're looking at correlation here. Okay, now let me show you how I can use this to make some money. Okay, now, so first thing I'm going to do, pound yen, I'm going to hide it, right? How am I going to hide it? I'm just going to remove it. Okay. Wow. Give me a while. My brain is not functioning as quickly as it used to. There we go. Sorry. So let's just say we can draw this line over here, and right about here, okay, right about here we are thinking, right? We have seen price bounce once, we've seen bounce twice, 3 times, 4 times, 5 times. Price is about here. We're looking at Aussie yen, right? And we're thinking, could there be a breakout, right? Could price be breaking this level over here, right? Could price be breaking this level? Could we be seeing a nice little breakout of this trend line? And of course, we can even pull up a channel. Could be a channel. I'm not sure it could be a channel. Yeah, it could be a little bit of a channel over here, right? And then we can't really tell if there's a breakout going to happen. Okay, now, all right, with this idea in mind, with this hypothesis in mind that price Aussie yen might be breaking out of this little ascending trend line, that's where we come in here. And how do I put it into like this, right? And I'm going to come in here. You know what? I'm just going to click comparison, GBP JPY. I'm going to put it as a new pane. New pane, and I'm going to put it in candles. Okay, maximize this. I'm going to do my own analysis over here. Okay, now I'm going to draw this same little trend line that we're looking at. over here. Okay, same little trend line over here. Now, what is this telling us? Okay, what is this movement here telling us? Right, is the breakout happening? Sorry, I'm just taking a while to decipher this. It's bouncing off the 61%. This movement, let me just say, let me just make sure I'm taking the correct levels. Yeah, this movement over here, it could be a false breakout, right? Because if it was a real breakout, you know, pound dollar will be leading the way to see a nice little breakout over there. Although what I'm looking at over here, this price rejection that we're seeing on pound dollar, right? Look at the long wicks that we see, and of course, this nice little, I think it's this, what's the opposite of a shooting star? Evening star, is it? Kind of formation. Looks like it's forming a nice little reversal pattern over there. It's forming a nice little reversal pattern at a key 61.8% Fibonacci retracement, and I think it could be a nice. I'm not sure if it could be a 61.8. Yeah, no, it's yes. Yeah, it's nice 61.8% Fibonacci retracement over here, where it's forming a nice little bounce over here, right? So this breakout might not be as good, as strong, right? Doesn't look like pound yen is making a nice breakout. It might actually bounce up nicely. And if we go back here on pound on Aussie yen, right, then we see that okay, maybe this is a fake breakout. So you can compare them side by side, right? And if you want to throw in an additional level of confirmation, right, I guess the next thing we can look at is euro yen, right? So I could actually come in here and throw in a euro yen analysis on a new pin, right? I'm gonna come in here, I'm gonna put this as candles, right? And I'm gonna do my own analysis on euro yen, right? So euro yen, does it look like it's on any support? You know what? We can't really use euro yen. There's not much of a level we can use over here. So never mind, we're not going to use euro yen. Delete this, right? So we're just using mainly Aussie yen and pound yen. You can see that how you're looking at one key level over here, right? So you're going to draw it across, right? This is a key level of breaks, right? So if pound yen really starts to confirm a nice little breakout, so what you want to do, what you want to avoid, right? What you want to avoid is you want to avoid the trade, the potential trade, when things are not lining up with each other. Okay, because normal people, there's no, it is not to say that Aussie yen is a leading one or pound yen is a leading one. Okay, there's no hard and fast rule that which one is leading and which one is not leading. However, what you want to do is you want to see them both confirm a move or both reject a certain move, right? Because if pound yen here has broken out, it looks like it might have broken out, but Aussie yen has not broken out. So this one might suggest that it might go down, right? Because it closed below the trend line, but this one has not closed below, so it's suggesting that it might bounce up. So because one is going up and one is suggesting that it's going down. However, when they do have, they are supposed to have a 93.2% positive correlation, right? You're going to look at this and you're going to say it's not right. The stars are not lining up. They're not singing from the same hymn book, right? You know, I would rather, in this case, if this thing is going down and Aussie yen really actually close below the trend line, right? Aussie yen close below the trend line. Aussie yen maybe close over here, right? Then it would suggest that price is going down. This is going down. I'll be a little bit more confident on that, right? Right now, it looks like, you know, price did break out of the trend line. It has not, you know, it has a nice little bullish kind of reversal here, but the other major strongly correlated pair here is not suggesting it. Now, how do you take this even one level further, right? This is where you can click on something like pound yen. Right? Yeah, click on pound yen, right? And we see what are the top positive and top negative absolute correlation, right? So one thing which we can use for pound yen to get additional confirmation, you notice that negative correlation, not that effective. Most of them are what, negative 60, negative 50. Anything below 80 is not even worth looking at, right? But now we're looking at Aussie yen. It would help us to look at franc yen, which has a 92.3% correlation with pound yen, right? So I'm going to come in here, I'm going to click on this, right, and type in CHF right? I'm going to throw on this on a new pane, right? I'm going to click on this, I'm going to put this into candle format, right? And I'm going to load it up over here. And what is this telling me? Okay, is this telling me that Franken, this is Franken, correct? This is Franken. This is Franken, is correct. Yeah, so what is this telling me? Okay. Give me a second while I just map out some stuff. It's just really on the spot analysis. What are you telling me, Mr.? This. Nay, I can't really force a channel out there. Sending support, right? Where is the current support level, right? We can see that. So another thing which I think now might be a good time to explain to you guys is that you don't exactly need to look for, you don't exactly need to look for the same trend lines breakout that you're looking at. Okay, what is a trend line on Aussie yen and a trend line on pound yen might not be a trend line on franc yen. Okay, what you're looking at is in terms of the bounce potential and the reversal potential. Okay, so in this example over here, what is the potential? Yeah, what is the potential for bounce on franc yen? Let's see. It is on the. Go remove this. I'm going to show you. I told you guys that this is going to be a slightly more advanced topic. So it's 38%. Okay. Now it's a 38% Fibonacci. Wait, just give me a second. I tend to go a little bit crazy when doing analysis, right? Looks like it's might be a breakout pullback kind of thing, right? Yeah. So what is the potential that this franc yen is going to bounce? I actually think it's a pretty high potential, right? Let me explain, right? There is a bounce from here, right? There's a bounce from here, a reaction from here, there's a reaction from here, right? It looks like my bounce from there. Ascending support, keeping prices pushed, like keeping the bullish shorter term ascending support, right? It's kind of giving price that little bit of bullish momentum. Longer term, very, very nice long term reversal, finally breakout, pulling back to the breakout to the descending resistance and support level. So we could be seeing a nice little bounce. 38% Fibonacci retracement over there, right? And of course, when you come down here, right, you come down, do a little bit of Fibonacci projection, 61.8 Fibonacci projection over there, right? So there's a lot of reasons why we can expect prices to bounce up from here with this knowledge, right? Okay, so of course I can even throw on an indicator. I can try Ichimoku Cloud, right? And I can see that how do I minimize this? Oh yeah, there you go. Oh, apparently I can't throw on a Ichimoku indicator on a correlated currency pair unless I open a different chart. But anyway, all you need to know is that the Ichimoku indicator is probably going to show it as bullish, right? I'll just show you what I mean. Right, it's going to come in here. I'm going to just delete this. I'm going to 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 change this to franc yen. If you need me to slow down a bit, let me know. Right, there you go. Right, Ichimoku indicator. Right, on franc yen, the same thing which I was showing you guys earlier. I think I was showing you on the H4, right? Was it on H4? No, it's on the H1, right? You can see that Ichimoku indicator is bullish, right? So I'm just going to show you over here. The Ichimoku indicator is bullish. A lot of reasons are expecting prices to go up. If we use the correlation that we're expecting here, okay, franc yen is supposed to bounce up, and it's 92.3% correlation with pound yen. So we should be expecting pound yen to go up too, right? If we're expecting franc yen to bounce, right, we should be expecting pound yen to bounce, which also means that we should be expecting Aussie yen to bounce, right? So we can see how we can draw the different correlations over here. Okay. Ah, shucks, the time frame should be 1 month. Frank Yen. It's still 79. Okay, so in fact the shit, the one that we should have been looking at maybe is CAD Yen, but so you get what I mean by using correlation across the different time frames, right? But now that we actually looked at Frank Yen, right? I have a pretty strong bullish view on Frank Yen. I'm going to click on Frank Yen now, and I'm going to see what it's telling me. Frank Yen over the next 1 month, positive correlation. I tend to avoid the try, you know, yeah, right. I tend to avoid this. Maybe I look at CAD Yen. CAD Yen, you could probably use CAD Yen, Frank Yen and CAD Yen, right? You could compare those two. Okay, so if you're expecting this, we're expecting a bounce on Frank Yen. You see, we're expecting a bounce on Frank Yen, which means that we should be expecting a bounce on CAD Yen, right? Because they are, after all, pretty strongly correlated over the past 1 month, at least 80% correlation, right? So many people might be wondering, is price going to, if would it break out from here, or would it bounce from this support? There's a traditional saying that you can, prices, the more times price bounce, the weaker it gets. But if you're looking at it over here, we can have a fair amount of confidence that price is going to bounce off this support. Why it's going to bounce off this support is because when we look at our dear friend, right? When we look at our dear friend, called Frank Yen, sorry. When you look at our dear friend called Frank Yen, right? We are expecting Frank Yen to bounce, right? If you're expecting Frank Yen to bounce, right, we should be expecting positively correlated pairs to similarly bounce, right? And CAD Yen has an 80%, 82% positive correlation, and it's right above support, so it is lining up to tell us that is going to bounce. And that's how you filter and apply many different kinds of correlations to increase the probability of your trades being correct, right? And same thing with Pound Yen, which I showed you earlier. Pound Yen doesn't look like, if Frank, sorry, I know it's a little bit advanced. That's why today's topic is advanced correlation, right? If talking about Frank Yen bouncing, right? Pound Yen, it looked like it was going to have a breakout just now, but it might be a fake breakout because its currency is Frank Yen looks like it's going to bounce, and CAD Yen looks like it's going to bounce, right? That means Pound Yen is less likely to do the breakout that we're looking at. Okay, I'm going to read some of the questions that sent through. Joanna Fonqua is asking if does it mean you could get in for 2 trades on both pairs rather than just trade? Yes, if you're going to get in on 2 trades, like on Aussie Yen, and you're going to get in on Pound Yen, you're going to trade both of them, right? If you're trading strongly positively correlated pairs and you're basing your trading strategy off the positive correlation of these 2 pairs, right? What you want to do is you want to reduce your risk exposure. Instead, if you intend to risk 1% per trade, instead of going 1% Aussie Yen, 1% like Pound Yen, you can go 0.5, 0.5%. So you're not over leveraging on the idea that this positive correlation is going to hold. Okay. Now, next thing I'm going to look at, right? Why not just sell Pound Aussie, right? Pound Aussie AUD. You could Aussie Yen, Pound. Yes, you could sell, but that would mean that you're expecting Pound to drop, right? But we have not confirmed that Pound is going to drop. We're using correlation. We're using correlation to get us a view, right? Selling Pound Aussie means that, for example, if you're bullish on Aussie Yen, right? If you're bullish on Aussie Yen and you're bearish on Pound Yen, right? If you're bullish on this and you're bearish on this, right? You could technically sell GBP. You could technically sell GBP AUD, right? Because selling GBP AUD is the same as being long on Aussie Yen and being short on Pound Yen. Technically, yes, you can, right? But that is slightly different in the way that using correlation. This is not so much of correlation, right? This is not so much correlation. It's basically trading the crosses, right? Nothing wrong with that, but we're using correlation to filter the trades right now, like to decide whether pound yen is going to drop. So we take it one step before. Now our correlation is trying to figure out whether pound yen is going to drop or not, right? Not that we're bearish on pound yen, right? We're using it to decide whether we should be bearish or not. Okay. Is 1 month the best time frame for correlation? I think so. We got a question from Kelvin asking, is 1 month the best time frame for correlation? There is no hard and fast rule to that. Okay, there's no hard and fast rule to that. Because it actually depends. It actually depends on your trading horizon. For example, right, if I was looking at the 1 month time frame, right, let me go here to correlation, right, over the last 1 month time frame, right, you're looking at correlation across the last 1 month. I'm going to, okay, come here, right, I'm going to use a little handy dandy. Last 1 month would be about here, right, about in April, about here. Now this gives me enough bars to trade. Okay, this gives me enough bars to trade. If I was on the 1 day time frame, you know, this would be terrible. I wouldn't have enough, right? I wouldn't have enough bars to trade from here to here, right? It's not enough for me to do analysis. I probably need to use this many bars, right? And this many bars would require me to have a correlation since 30th March, which is more than 2 years, right? Not necessarily long term will be more confirmation, but it is true to a certain degree that the shorter term correlations are not that reliable, right? Shorter correlation and causation are two different things, right? Just because things move in tandem for the past 1 day doesn't mean that they are correlated. So for example, I understand, right? I understand why Aussie dollar would have a correlation with Aussie Sing, Aussie CAD, Kiwi dollar, you know, and it has a negative correlation, dollar CAD, dollar NOK. You know, it makes sense. No, sorry. This makes sense, right? They talk about the past 1 month movement. Aussie dollar, Aussie Sing makes sense. Aussie dollar, Kiwi dollar makes sense, right? SEC yen, it starts to become a little bit less correlated, right? But if you look at the next, like, past 5 minutes, right? You got dollar HUF over here. How did it end up over there? No one knows. Euro HUF, right? Dollar NOK, right? Why is it there, right? All of this, does it make sense why it's correlated? No, they just happen to be moving in the past 5 minutes together. There is nothing that is really tying them as real correlated pairs. You know, if you really want to take a look at it, dollar HUF, right? Aussie dollar and dollar HUF, right? We got Aussie dollar here, right? And we're going to do a comparison. We're going to dollar HUF, dollar HUF, sorry. Not on the same pane, sorry. Maybe on the new price scale. One hour. Okay, in this example, it does look like it might have a little bit of correlation here and there. Not the best, right? But you get my drift. I probably need to find an example where just because they're correlated over the past 5 minutes does, oh yeah, that's a good way to put it. Just because they're correlated over the past 5 minutes doesn't mean that they're correlated over the past 1 month, right? Usually a slightly longer term time frame will give you a slightly better gauge on their correlation, right? So yes, slightly longer, slightly better. But when it comes back to the question, right? Where am I going to remove this thing, right? When it comes back to the question, right? How long should you use for your correlation, right? It depends on like 24 April, right? So if I was using the 1 month correlation, right, the price movement over the last 1 month, using the 1 hour time frame is okay. Using the 4 hour time frame is slightly tricky. It's not that much bars that I can trade with over here, right? So maybe the 1 hour time frame will be the sweet spot for that. If I have the 15-minute time frame, I could still technically use it, although it's a little bit bigger, right? So maybe 15-minute, 30-minute, just enough bars for me to use to do a decent analysis. Okay, so yeah, that kind of depends, right? I think, right? I think just how advanced this is, right? We probably need to arrange another webinar, right? We probably need to arrange another webinar for to cover further correlation studies, right? But I hope, you know, I actually skipped to the last point on how you can actually use correlation to trade by really breaking it down for you guys on how how you can like for example Aussie dollar over here. A perfect example is that maybe we can have it here over here. Nope, there's no. Okay, Aussie dollar. I'm going to show you an example in real time, right? So looks like there's a nice little support. Looks like there's a nice overlap over here, right? Looks like price might do a little bit of a bounce, right? Testing Ichimoku cloud a bit, right? And it could be testing a little bit of Fibonacci, right? Testing a little bit of Fibonacci. I think it's testing the 50% Fibonacci over there. Do we think it's going to bounce or might it not bounce, right? That's a key question we're asking ourselves over here. Do we think it's going to bounce up another time? A good way, come into here, load up Aussie dollar, right? Look at the correlation over the past 1 month. The one that we want to look at, Aussie dollar, of course, Kiwi dollar, right? Kiwi dollar, okay? We're going to come in here, we're going to compare. We're going to compare Kiwi dollar. We're going to put up on a new pane, right? Kiwi dollar. If Kiwi dollar is going to bounce, if Aussie dollar is going to bounce, then we might be able to see Kiwi dollar bounce too, right? So in this case, come in here, draw a line all the way up. And this is what scares me a bit, okay, with Kiwi dollar, right? And this is how the lines are not lining up. It might be a better idea not to take the trade, right? We got a support level over here, but price has made a breakout over here, right? So actually, did price make a channel breakout? That'd be a scarier thing if price did make a channel breakout, right? It looks like price might have made a channel breakout, pretty strong channel breakout. So if Kiwi dollar is telling us that price might go down further, right, as you can see over here, then our view on Aussie dollar is not as safe, right? So I would suddenly not be as confident about taking this trade on Aussie dollar. I might not want to play this bounce on Aussie dollar because I suspect this could be, this could be a breakout because things are not lining up. Aussie dollar says that it's going to bounce. Kiwi dollar says it's going to drop, right? One is right, one is wrong. Do I want to take that risk? We don't know who is right, who is wrong, but I just don't like that there are two people who are supposed to be in unison and agreeing with each other are not agreeing with each other, right? So that's the thing I'm a little bit scared about, right? Correlation, yes. Maps, one way is to compare like that. Another way, so Maps is asking how else can you use correlation, right? A good way to use it, I guess, right, is this indicator. You search correlation coefficient, press it over here. The symbol that you want to look at, when I'm doing Kiwi dollar, I want to compare a correlation to Kiwi dollar, Aussie dollar, and there we go, right? So we can see that Aussie dollar and Kiwi dollar, most of the time is 1, right? You can see that the value of 1 is there. So it's pretty strongly correlated most of the time besides small little dips. How does it look like if it's perfectly correlated? So if it's perfectly correlated, I can compare Aussie dollar with Aussie dollar. There we go. It's perfectly correlated. It's like one straight line over there, right? If it's not correlated at all, I'm just going to throw on a crap symbol, right? I'm going to throw on maybe GBPCHF, okay? See, something not correlated, this is how it looks like. There's no clear correlation relationship which you can use, right? So yeah, if there's a good correlation relationship that you can use, like Aussie Sing, for example, yeah, you can see there's a fair amount of positive correlation you can use here on TradingView. How do I do it again? You go to indicators, you search correlation, click on correlation coefficient, and you type in the symbol which you want to compare it with. We can add in Google and we realize that it's completely random relationship. Okay. Now, guys, I hope you found this webinar useful. I'm just going to do a quick poll. If you can help me, right? Set up a poll, right? I'm gonna launch this poll, right? If you found this webinar useful, please help me do a nice little rating for it. 1 to 5, right? It helps us. It's a good feedback that we get. Know how we can constantly improve the webinar, right? So I mean, if it's good or bad, let me know, right? Even if you think it's like a 1 or 2, right? Please let me know in the comment section, right? I'll know how I can improve it, right? So don't worry, I won't hunt you down if you for 1 or 2, but at least let me know. Am I moving too fast? Because sometimes it's an advanced course. I might be going at crazy speed. It might be a little bit overwhelming, and sometimes some people will be like, "Hey, that ain't cool," right? And of course, that's where let me know, and I can slow down a bit, can direct you to the correct places to learn at a slower pace, right? Thank you, Donovan. Thank you, Diana. right? Thank you, Ajay, right? I'm glad that you've learned it quite well. And we have a good 89% who voted that it is at least 4 and 5%. 4 and 5 stars. Thank you very much, guys. I need to close this off. Yep. It's okay, right? It's okay, right? And I always like show we got a good 89% voted 4 and 5, right? For the 3% voted 2, let me know. Or 9% that voted 3, let me know how I can better improve it. Okay. Now I got a last question from Zabar, right? Last question from Zabar, right? Zabar is asking. Sorry, does using correlation or between two pairs create double the work or sometimes confusion, double the original train, right? Zabar, if Zabar asks if you use correlation on two currency pairs, does it sometimes cause unnecessary confusion? No, because when you use correlation on two pairs and they line up, and so you need to look for strongly positive instead of 0.8, 0.9, 0.8, you can go for a 0.9 positive, 0.9 negative, right? If it lines up, it should not give you confusion. It should give you confidence that looks like it's going to be a good trade. If it gives you confusion, that means you are in the wrong side of trade. And it's not whether it gives you double the amount of work, because trust me, you'd rather put double the amount of work than to lose the trade. If I tell you, okay, put in 50% of the work today, you analyze one pair, you're going to lose money. You analyze two pairs, you're going to make money, right? You're going to want to analyze two pairs. It's not about the amount of work that you put in, right? It's whether that amount of work justifies whether you can increase your chances of being a profitable trader. Okay, guys? Now, that's it for me, right? I hope you found this webinar useful. Remember, guys, tune in tomorrow for another, we'll discard the changes, right? Tune in tomorrow. I'm going to give you guys the link right now. YouTube IC Markets, right? Live market analysis will be me and likely Cassandra, right? Me and likely Cassandra in tomorrow's live market analysis. Pretty fun session together. We're going to dive into the markets together and learn how to take on the markets in real time, right? Looking at some nice analysis. All right, it'll be a fun time. Tune in tomorrow, same time, same place. Well, not same place, same time, but on YouTube Live. Okay. Yeah, everyone's happy to see Bob, right? Okay. Thank you very much, guys. Remember, stay safe, trade safe. I hope you enjoyed today's session. I will catch you guys tomorrow for a live market analysis session. All right. Ciao. Take care. Thank you very much, guys. All right. Thank you very much. Thank you, Desiree. Thank you, Simon. Thank you, Bob, Diane, Jasper, Tuan. See you guys tomorrow. Thank you, guys. Thank you. Bye-bye.